Hello, and welcome to NYSE Investment. This analysis is for ServiceNow on the New York Stock Exchange as of 20th of July, 2026, with a share price of $104. The full report is on NYSE.ca. ServiceNow runs the Now platform, the enterprise workflow automation system with a deep integration moat, quality 80. It is decile 1 cheap at 25 times forward versus 28 times warranted, so the medium and long calls are a buy. The short call is hold. Q2 lands on 22 Joule and agentic AI substitution fear weighs on the tape. ServiceNow runs the Now platform, a cloud workflow automation system that large organizations use to route, approve, and track work across IT, HR, customer service, security, and finance. Its origin and stronghold is IT service management, the digital nerve center of a big company's IT department, which it has extended into a single platform of record for enterprise workflows. What sets it apart is depth of integration. Once ServiceNow is wired into a company's approvals, data, and processes, it is very hard to remove. Business quality is high at 80, and revenue is still growing about 22%, ahead of its main rivals. The valuation is the reason the longer horizons are a buy. ServiceNow now sits in its cheapest decile of the last 5 years, trading about 25 times forward earnings against a warranted multiple near 28 times. So the valuation pillar scores 64 on the attractive side of fair. For a high-quality, sticky enterprise software compounder still growing north of 20%, that is a rare entry. It is a NYSE pick with a base case of $132. So the medium and long calls are a buy, quality growth, finally at a reasonable price. So why hold for the short term? The calendar and the tape. Q2 earnings land on the 22nd of July, a binary print that fires an earnings event gate and blacks out the entry. And the timing pillar is a soft 46 in a monthly and weekly downtrend, though basing at its 50-day average. Underneath is a genuine debate. An agentic AI substitution fear that enterprises might self-build on large language models rather than buy the platform. That is a reason to wait for the print and a confirmed entry, not to sell. The bear case is near $82, a retest of the 52-week low. Now, the other side of the ledger. Q2, 22 Joule. Guidance softening is a binary risk. Agentic AI, enterprises self-building on LLMs. SaaS D-rate, bear approximately $82 to the 52 WK low. Now weigh the risk against the reward. The bull case is roughly 70% above today, the base case the most likely about 26%, and the bear case a fall of about 22%, so you are risking about 22 to make 70. So, I'll call on ServiceNow on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by NYSE Investment at NYSE.ca. The link to the full report is in the notes below. Have a great day.